Hi there, I'm IRK and this is my channel Get IRK'd. In this episode, can IDEXX Laboratories turn your pet's urine tests into liquid gold for your portfolio? In this episode of Investing In, we're going to take a look at IDEXX Laboratories, ticker symbol IDXX. Unless you were hiding under a rock during the pandemic, you probably noticed that almost everybody went out and got a couple of pets to keep them company during lockdown. And even before the pandemic, the whole concept of treating your pets as family members or the humanization of pets had become a huge theme over the years. So whether you own pets yourself or you're just looking at a way to play this theme, there are a lot of different approaches you can take. However, a lot of analysts believe that the growth that we saw from the pandemic may be impeding this theme into the future, so taking a more obvious approach like investing in Petco or Chewy might not be the right angle. Personally, my play on this theme for years has been IDEXX Laboratories, because as your pets age, you need to have them have medical treatment. And IDEXX Labs provides almost everything every veterinarian needs, not just the tests, but in addition to that, they even supply the software for billing and records keeping. And you may not have noticed it before, but if you do have a pet, the next time you go to your vet, keep your eyes peeled and you'll see IDEXX Labs logo all over everything. Even though IDEXX Labs has competitors like Zoetis in the space, IDEXX is the best in breed and the leader, and you'll see as we go over the charts that's had a huge run. So first off, we're going to take a look at IDEXX Laboratories fundamentals, then we'll take a look at a buying plan of what I would do if I didn't already hold shares in the position, and then I'll show you where my current position is, the one that I cover in Investments in Play that I started in 2017. So first off, let's take a look at the fundamentals, and you can see that IDEXX Labs has a pretty high price to earnings ratio. In fact, pretty high is an understatement at 72.06. As we've discussed in previous episodes, a high growth stock like IDEXX Labs is starting to be considered overvalued when its PE ratio is over 30. So when it goes over 70, you know that this stock is overvalued. However, like most growth stocks, IDEXX Labs is one of those stocks that's been overvalued for the entire time that I've been invested in it. It just stays expensive, so if you want to get in, sometimes you just have to pay up. IDEXX Labs earning per share is $8.72, and it has a one-year price estimate of $701, which means it has 11.5% upside from here. IDEXX is a historical outperformer, and it continued to do so in its last earnings report in October, where it did beat earnings expectations. However, just like every other company operating in the global economy, supply constraints and inflation concerns caused a lot of investors to take profits in what was already a high-flying stock. With that said, let's take a look at IDEXX Labs on a chart, develop a buying plan, and see where we'd go from here. As always, let's start at the bottom of the pandemic and draw a Fibonacci retracement from the low all the way to the high of this past year to see if we can develop levels of where we might be able to target buys for this stock. You can see, just like the waste management position we discussed a few weeks ago, that these Fibonacci retracement levels aren't really lining up where the support is with the stock, so we're going to have to start from a different position and go from there. In this case, I see this bottom here as being pretty key, so let's draw from the bottom here to the high of 2021 and develop some new levels and see where that goes for us. You can see that this new Fibonacci retracement really provides us with better levels, as the 23.6% retracement line has had a significant amount of price history in the past. Below that, we have the 200-day moving average, which is currently at $593, which is moving up to meet where the price is consolidating right now. After that, the 38.2% retracement seems to be providing us a little bit of price action back here. We have a little bit of support between the 38.2% retracement and the 50% retracement here, and then we've got support down beneath the 50% retracement, a little bit below the 61.8% retracement. This is going to give us some good buying targets, so let's go ahead and find some levels. Right off the bat, a good starting point might be about here at $612, where you could see that over the past, IDEXX has consistently found support at this level. However, traditional analysts will point out that once it's been tested so many times, it's hard to tell whether or not a support level might hold. So you might not want to use a 50% allocation on your first buy. You might want to start with something smaller, somewhere between 25 and 50%. From there, my next price target is probably going to be right about here, where you can see that there's a little bit of price action providing support in the past at $556 and change. After that, I'd like to go down to this level here, where you can see at $507, we've seen seen support in the past, and depending on whether you're feeling more aggressive or not, you might want to shoot right for the 61.8% retracement. You might want to go a little bit higher here at $487, or if you were feeling a little bit more conservative, you could wait for it to test below, and I would probably shoot for here at $465 and change. After that, going back in the past, you can see that we've had a lot of support at this level of $448, followed by support just below the 78.6% retracement down here at $421. After that, we go for the bottom of our retracement, and I'd probably use this support from over here at $353 so that I could make sure I get above all of this price action that we've seen over the past. If you started with a 30% allocation and bought in 10% stages on the way down, you can see that we would have a 100% allocation should it pull all the way back down to $353. However, it's important to note that a pullback of that nature is nearly 50%, so we need to go back in the history of IDEXX to see if it's done that before or if this is an unrealistic price target for the stock. So in order to do this, let's go back to where it sold off in the pandemic, and you can see that it did sell off 43%. Going back a little bit further to 2018, you can see that IDEXX Labs regularly sells off more than 30%. Since it never did drop 50% or more during the pandemic, it's highly unlikely that it's going to hit the low point of our price targets. However, for me, that's the way I like it. I always like to keep dry powder on the side just in case a stock sells off more than I anticipated. I'd always prefer to not have a full allocation and instead have some money on the sidelines instead of having 100% allocation in a position, have it sell off more and me not be able to buy more because I'm already all in. I started my position in IDEXX Labs back on July 26 of 2017 with my first buy at $167.29. And obviously, since there's been a lot of price action since that point, I'm not going to go over all of my trades. I'm instead going to start with what I did during the pandemic. So let's move forward to there. When the pandemic sell-off started in 2020, my position was at $116.86 per share. And I made my first buy during the pandemic sell-off in IDEXX on March 16, 2020 at $233.09, which raised my per share cost to $128.48. As the pandemic sell-off continued, a couple of days later on March 19th, I made my second buy of the pandemic at $190.27, which raised my per share cost up to $134.10. And then the day of the market bottom on March 23, 2020, I was able to make a buy at $170.18, which raised my per share cost to $137.11 shortly before IDEXX bottomed here at $168.65 the same day. From there, I decided to let IDEXX bounce a little bit, and then I started taking profits relatively quick because no one knew if we were going to see it retest its lows. Over the next couple of months, I took profits twice, once on April 27th, selling some at $275.31 a share, which lowered my per share cost to $124.54, followed by a sale on May 27th of 2020 at $300.19, which further lowered my per share cost to $106.98, which was lower than the $116.86 that I started with at the beginning of 2020. A few months later, IDEXX continued to make new all-time highs, so I took even more profits on July 22nd at $367.87, which lowered my per share cost to $77.99. In November of 2020, the entire market started to feel a little volatile, so on November 4th, I took more profits at $460.39, lowering my per share cost to $30.19. Then on November 6th, I decided to take all the capital out of the position with a sale at $470.82, which lowered my per share cost to negative $32.76. The negative per share cost means I had no capital in the position, and instead each share adds $32.76 to the bottom line in addition to the value of the shares. However, IDEXX was still not done going up. On March 18th of 2021, I decided that maybe I had sold a little bit too much prematurely, so I replaced some of the shares I had sold at $490.48, which raised my per share cost to negative $25.25. And that turned out to be the right move because IDEXX Labs continued higher throughout 2021. In fact, from where IDEXX Labs opened the year at $499.87 to its all-time high of $706.95, it earned more than 41% year-to-date alone. And it was that realization that made me realize I needed to take profits. So on July 28th, I sold some more at $691.11, very near its all-time high, and lowering my per share cost to $142.65. Since then, as we entered the fourth quarter of 2021, I decided to start replacing those those shares, so I did so with several different buys. I added more to my IDEXX position when the market sell-off started in September on September 1st with a buy at $667.42, which raised my per share cost to negative $132.83. I added more on September 27th at $650 even, which lowered my per share cost to $115.67. I added even more on September 28th at $627.06, which raised my per share cost to negative $99.89. And I did my most recent buy on October 4th at $610.57, which raised my per share cost to where it is now at negative $85.40. From here, my next price target is $582.89, slightly below the 200-day moving average, where you can see that it's found support in the past. If IDEXX doesn't sell off to this point, so be it, but as you can see, I've already bought so much between the $600 mark and the $670 mark that I want it to sell off a little bit more before I replace any more of the shares. That being said, I'm more than comfortable with this position. With a negative $85.40 per share price, it means that I've pulled significantly more profits out of the position than it actually cost me, which is awesome. For me, when I look at the pet sector, sure, the growth might be gone. People might not be getting pets in as big numbers as they did in 2020, but the thing is, your pets get older. It's very sad, but as your pets get older, they're going to need more and more medical attention, which means more and more income for IDEXX Labs. So even though Petco and Chewy might not see growth, I firmly believe that IDEXX Laboratories will see growth as we move forward into the future. For me, this makes IDEXX the best play on the humanization of pets. It's the best pet-themed play that I can come up with, and it's the one that I'll be holding in my portfolio for the long term. And as always, you can follow my investments in Play portfolio completely for free at GetIRK.com. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.